Okay, let me know where you are following from. All right. All right, fantastic. Welcome on board. I can see Christian. Okay, hi Christian, you're welcome. You're welcome. You're welcome. You're welcome. All right. So let's get started. Today we'll be looking at technical analysis using price action. My name remains Tunmise Olaoluwa. Okay, so a quick disclaimer: leverage trading involves risk, so trade responsibly. There are regional restrictions that applies to several regions. Some regions, please do well to check our terms and conditions for that. Now, this webinar is for educational purpose only and does not constitute any financial advice. Do understand that past performance is not indicative of future results. All right. So here, Tunmise Olaoluwa, I have over 7 years experience with a solid background in finance and quantitative research. My trading result has been consistently profitable across various strategies. I frequently trade price action, momentum, trends, and candlestick patterns, primarily focusing on the Euro USD and USD JPY, and also USD JPY currency pair. So here is our conversation, the agenda of our conversation today. We're going to be looking at, we're going to discuss the use of top-down strategies. We're going to review Euro USD currency pairs. We're going to review price movement of Euro USD. We're going to review any currency suggested by the audience. And then there will be an open ground for Q&As. So if you have any question, please do well to ask. Now, this session is going to last for 45 minutes. And we have the YouTube live chat. Please, let's leverage the YouTube live chat to ask our questions during the webinar. And I will periodically check the chat and answer them all. Now, what will this strategy consist of? So the strategy is going to consist of analyzing historical price movements, utilizing candlestick formation, chart patterns, and market structure. Then what kind of trader is it suitable for? 1 is suitable for position trader, 2 is suitable for intraday trader, and 3 is suitable for swing trader. Now, when to use this strategy, you can use this strategy during a high liquidity period, time frame from 1 hour to 1 month. Now, let's have a deep dive into the session, into the live trading session. All right, so here we are in a live trading session. If you joined us in our last session, some few weeks back, you remember that we targeted, USD JPY. We targeted USD JPY to short from this level, and I closed this trade today. I saw the market moved from, the market moved up, okay, and from here it moved down. So I closed at this level. All right. So we're going to explore. This is USD JPY. So we're going to explore Euro USD, then come back to USD JPY. All right? Good. Okay, let's just take this off so we start from the scratch. So don't forget, we are carrying out a top to bottom approach. All right? We are carrying out a top to bottom approach. And when we are viewing something from top to bottom, it only means that we are looking at it from, a higher time frame down to the lower time frame. This has been a very, very helpful strategy. All right, a very helpful strategy where we get to get a direction of the market from the higher time frame, okay, then do a cross comparison with lower time frames and execute the trade on a 1 hour time frame or a 4 hours time frame. Now, this is important for us as a trader when looking at a top to bottom strategy. All right, let's go deeper. Okay, let's go deeper. Fantastic. I can see some of us on the call now. I can see Marvelous from FCT Nigeria, Mohammed. I see you, and every other person. All right. So this is the daily time frame of Euro USD. Okay, this is daily time frame of Euro USD. So yeah, let's analyze the market. So here we want to understand the market structure, where the buyers are, where the sellers are, what direction is the market facing. Have we broken any major support and resistance level? All right. So here, putting out major levels of support and resistance. Okay. All right, so here we are mapping out levels of support and resistance. If we look closer, let's see, you can see currently at the support zone. Yeah, let's have our support zone here. Okay, price has been ranging in this market. Okay, price has been ranging here. All right, so now let's go down to the lower time frame, which is the 4 hours time frame. But before we go to the 4 hours time frame, let's understand how price moved, currently at this level. So at this level, we can see that. Let me fetch my. Okay, let's just do this. Yeah, so you can see that there was a breakout at this level, which led price to where it is currently. All right, and now price is now trying to touch that same level it broke out from. Price has been trying to touch that same level it broke out from, as we can see here. Then we can also see it happen here. All right, then we can also see it happen here. This is a very common move with price. All right, it's a very common move with price when it's trying to test the same level of support that it turned into resistance, because this level here was previously a resistance level. After this breakout, this resistance level became a support zone. As you can see here, first support, second support, third support, right? Now anything that makes price break out of this support zone, whatever makes price break out of this support zone, we will be seeing a further drop in price down to this next resistance, next support zone. Whatever makes price break out of this support zone, we will see a continuous fall in price down to the next support zone. So these are very critical for us to watch out. All right, they are very critical. Good. So we are looking out for a breakout on this support zone. If there's a breakout on this support zone, then there will be a continuous fall in price. Plus, when we look closely, likewise, we might see a push up in price up to this level. Now, why would that push up in price happen, and what would confirm that push up in price? So the moment price close above these candles, if price close above these candles, right? Good. If price closed above these candles, then we would see a further increase in price. Because if you look at it now, this particular level is a resistance zone now. It's a resistance zone. If you look at it previously, it was a resistance zone. It's a minor resistance zone, and here it turned support, moved up, came down, was broken up through. Then it became a support zone. A support zone that became a resistance zone. So if price is now going back here, right? The only confirmation that price will continue to go up if it breaks out of that, minor resistance zone. Whatever makes price break out of this minor resistance zone, there will be a continuous ride. All right? There will be a continuous ride in price. This is like very, very important for us to know. If you are following, let me know in the chat. If you are following, let me know in the chat. If you are following, let me know in the chat. If you are following, let me know in the chat. Okay? Are we together? Are we together? Are we together? Are we together? All right. All right. Let's go. Let's now go to the 4-hour time frame. Now, if you look closely in the 4 hours time frame, you definitely see that here price has been in a downtrend from here. Price has been in a downtrend. Okay. So you can see here now that price has been in a downtrend and price has been moving up that trend. Let's have a closer look at that. Okay, good. So you will see here, let's take this. You see here, it started here, a spot here. Alright. Then another one here. Okay. Then another one here. Okay. You can see it here also. Then another one here. All right. So you can see here now that price has been ranging, has been moving in this trend. All right. So there's a likelihood that price will definitely go up and touch this trend. There's a higher likelihood. If you watch it now, you see that the buy momentum is more. There's a big buy momentum coming in. You can see the consecutive green candle. This is a confirmation. All right, this is a confirmation. Once this candle closes now, the next one is a confirmation that it will hit this level. Right? It's going to hit the next point, the next edge on the trend. So this is another way for you to position yourself and lock in ahead. So how do we lock in ahead? While I've seen a big opportunity here, I will further want to confirm from the 1 hour time frame and execute from the 1 hour time frame. Okay, good. So let's go down here and go to the 1 hour time frame. The 1 hour time frame will give us a very good spot to enter. Now if you look at this on the 1 hour time frame now, I'm already seeing a double bottom. A double bottom. Here is a double bottom. Here is another double bottom. All right, and you can see the neck. You can see the neck here. So you can already see that the circle of the what is it called? Of the double bottom is complete. It's complete at this point. You can see it here. Once it already breaks out through the neck, that's all. That confirms your upside potential, right? And the double bottom is a confirmation for what? Market reversal going in the opposite direction, as you can see. So from here, we will then execute a buy. When we execute a buy here, our next stop level is here. All right, our next stop level is here, and then we put our stop loss here. Our next stop level is here. We put our stop loss here. So let's go. I'm placing a buy. Good. Now we've placed a buy. Let's set stop loss and take profit. Stop loss and take profit. So my take profit would be here, and my stop loss would be here. Okay, confirm changes, that's all, and we are good. All right, can you see now that we are good? So now you can see how we are able to do a cross comparison, right, of across these time frames, from the higher time frame to the lower time frame, from the lower time frame, to a lower time frame. So from daily to 4 hours, from 4 hours to 1 hour, and we make our decision. If you have any question at this point, please do well to drop it in the chat box. I'm waiting for your question. If you have any question, please drop it in the chat box. I'm very happy to answer all our questions. So if you have any question, do well to drop it in the chat. If you have any question, do well to drop it in the chat. If you have any question, do well to drop it in the chat. If you have any question, do well to drop it in the chat. I'm waiting. If you have any question, do well to drop it in the chat. Okay, I'm waiting. Any question? All right. Though I believe you have questions, you can pop them later and then I would always answer. So let's look at another instrument. So I saw someone was saying something on gold. Said, please tell gold buy or sell zone level. Okay, I think a question came in from Marvelous. Says, do you ever consider dollar index in relation to the euro index at the moment when trading euro USD pairs? And that depends on your strategy, right? That depends on your strategy. So what we are looking at here is a top to bottom approach and not a comparison with the index, the dollar index, right? However, there are traders who look at the dollar index for a confirmation on trading the euro USD, right? So you can always definitely come up with your strategy, backtest it, see how it goes, and if it's something that works for you over time, why not? You can implement it, right? But definitely maybe in our next webinar I'll look into that and see how to explain to us how to trade using the dollar index and euro USD. All right, let's look at gold. Someone mentioned gold, so let's look at gold. Oh, in one of our webinars, we analyzed this, and I mentioned that when the price gets to an all-time high, look at the room to the left, or the last 12 candles. If you check the last 12 candles and there are no candles there, short the market. And at that point, I recommended shorting the market. So you can see how price went, came up, and now price came as far down to our level of prediction. You can see. Okay? You can see. Good. And I mentioned that my chances of winning will not be certain, not 100%, but greater than what? 60%. So I mentioned that the possibility that this would go bearish, okay, is not 100%, but is a greater than 60%. And we can see what is happening here. Okay, we can see what's happening here. So this is very, very important consideration for us. We're going to cancel everything here and start our analysis from ground up. So this is the daily time frame of the gold USD. All right, daily time frame of the gold USD. Now, you know, when we start with a top to bottom strategy, what we need to first do is to understand what the current market structure is. what is the level of support and resistance? Where is price currently seated? Okay, so we're going to do this. Let's map out these levels. These are key levels. These are key levels. So we have been able to map out key levels of support, key levels of resistance. Understanding that this helps us to have a view of where the buyers are locking in and where the sellers are unlocking in. Now, let's take a closer look at this. We see buyers take a swing from 4,300 up until 5,500, even close to 5,600. Okay? And there was like a serious swing down, to 4,700, then a rally up a bit down to 5,400, and now we see price came to 5,079, struggled a bit and fell as far down to 5,494, and currently price has broken through two support zones. Let's have a view of that. Two support zones. This is support zone 1 and support zone 2. Support zone 1 and support zone 2. And now price is below the support zones. Price is below the support zones. This is very important. Now, this is only signaling something interesting, further interesting, that we might see price continue to drop further up until 4,300. Okay, up until 4,300. Good. So let's do this. So now look at this from the lower time frame, which is the 4 hours time frame. The first support zone is out, because when you look at it closely, you see that there was a descending triangle that was even formed. If you look at it clearly, the descending triangle was created, and here we see price fell farther down. Okay, and now we see another continuous fall in price here. So, what do you think might further happen here? I need to hear from you guys. What do you think will further happen here? What do you think will further happen here? What do you think would further happen here? Who can tell me from your own point of view? From your own point of view. So what will further happen here would be a likelihood of a continuous drop in price up to this support zone. Okay, up to this support zone. Okay. Are we together? So there's a likelihood that price will drop further from this level. So how do we position ourselves? Let's go down to the 1 hour time frame. So if you look at this closely now, you see that price is currently ranging at this level, and there are still sell pressures here. There are still sell pressure. Sell pressure still exists. Oh. Sell pressure still exists. Sell pressure still exists here. Because when you look at it closely now, you see that there are weak candles here. Very weak candles at this level. And the likelihood of a further drop in price is higher. So what I'm going to do is this. I'm going to short it with a 1 lot size. Okay. And put this level as my take profit, this level as my stop loss. So let's do that. Gold is very volatile, so you have to be careful. Okay. All right. So I'm gonna, yeah. So someone is asking a question and saying that how far apart? How far apart? Let me see. It says, hello, I'm new to trading. Please, how far apart should the take profit be from the stop loss? How far apart should the take profit be from the stop loss? How far apart should the take profit be from the stop loss? So when setting stop loss and take profit, there are two things I do say. One, discretionary approach. Discretionary approach is, what is your approach? I mean, what are you comfortable with? At what point are you comfortable taking profit? And at what point are you comfortable taking loss? All right? I think that's very, very important. So it's discretionary. It has to be like you decide that. On the other end, when setting stop loss and take profit, you could also look into putting your stop loss at a 1-to-2 ratio, which means you are putting your take profit at a position that is twice your stop loss. That's another approach. Another approach is to use support and resistance zones. Your stop loss can be the next closest support or resistance zone depending on the direction you are facing. All right? And your take profit can be the next support and resistance zones. So it's on you to actually decide. Okay? It's on you to actually decide that. Fantastic. Now that we are clear on this end, so today we've looked at the Euro USD position, and we've positioned for Euro USD, and now we've looked at the gold USD position, and we've positioned for it. It's important that we consider risk management in every of our journey. All right, as a trader, you consider risk management in every of your joining, and that is why we're going to be discussing risk management as a core approach to every traders. Now I see that someone said I'm new to trading. So if you are new to trading, it's important that you start with a demo account. Practice trading with virtual money to understand the market and your strategy without without risking real capital. 2, use a stop loss order. Always set a stop loss to limit potential losses on every trade. Set a stop loss. It is very, very important. 3, trade with a risk to reward ratio. Aim for a minimum of 1:2 risk to reward ratio, meaning you should aim to gain at least twice what you are risking. Aim to gain at least twice what you are risking. It is very, very important. It is very, very important. Now, 4, you need to, risk only small percentage per trade. Risk only small percentage per trade, which is limit your risk to 1 to 2% of your trading account per trade to prevent significant losses. All right, to prevent significant losses. 5, diversify your trade. So avoid putting all your eggs in one basket. Avoid taking all the risk on a single currency pair. Okay, spread the risk. Okay, spread the risk. Avoid over leveraging. That's 6. You need to use leverage carefully. Excess leverage can amplify your loss. 7, stick to your trading plan. Have a clear plan and avoid emotional trading. Don't deviate from your strategy. All right? Don't deviate from your strategy. 8, keep up with market news. It's important that you keep up with market news. You need to, as a trader, you need to stay informed. Okay? You need to stay informed about economic events and news that can impact the forex market. 9, avoid over trading. Don't trade too frequently. Sometimes the urge to always be in a position, to always have an open trade is always there. Avoid that urge. Okay? Avoid that urge. Focus on high quality setups only. Focus on high quality setup only. And 10, review and adjust your strategy regularly. Review and adjust your strategy regularly. Continuously analyze your trades and refine your strategy. It's important that you continue to analyze your trades and refine your strategy regularly. It's very, very important. Understand that we have our Octa trading app on the Google Play Store. Octa offers a wide range of trading instruments with low spread, fast execution, zero commission. It also has various educational resources, 24/7 customer support, and a strong commitment to fund and data security. Double your deposit using the promo code. Now, you should take advantage of this opportunity with this promo code, which means when you deposit any amount, you get twice of the money you deposit. Now you can get this in 5 steps. Open the Octa trading app, visit our website, go to your profile, find the promo code section in the menu, enter the promo code and press activate. Make a deposit and enjoy your bonus. Alright? Promo code is Tunmise 100. Tunmise 100. This is very important. So, the summary of our conversation is this: we discuss price action, top to bottom strategy, and its components, its suitability for traders, and its applicable scenarios. We also reviewed the strategy on a live chart. Okay, now there are principles that we must take away. Now, what must you take away? One, analyze trading instruments to understand how they behave under various market conditions. Two, review your actions and reflect on your decision to identify what worked well and what can be improved. Three, keep up with the latest market news and updates. Four, use educational resources to enhance your understanding of trading strategies and tools. So, we value your feedback. Please guys, take a moment to scan the QR code on the screen and give us a feedback about our sessions and how we can improve them. Please note that your feedback is essential for us to improve our future webinars, and this survey would only take 1 minute of your time. So please do well to give us 1 minute of your time and fill the survey. All right, good. Thank you very much for joining, and I look forward to seeing you in our next session. Please do not forget to tap on the subscription button and smash that notification bell so that you'll be the first to be notified whenever we have our next and our future webinar. We would love to see you now and always. Thank you for joining, and see you next time. Bye guys.